What's up, guys? This video is going to be on manipulation legs. I'll be explaining what they are, how to spot them, and how to use them. So the first thing I'm going to get into is what is a manipulation leg. So I'm going to start out by drawing it out, right? So the first thing we're going to see is a big move up or down, and then we have a move back up, which this would be a leg back up, and then the manipulation leg is this last move down before actually moving up, right? So you have this little move up, and then we take out this sell side liquidity that we just created with this low after a big move down, and then the manipulation leg is taking this liquidity one last time before moving up. Now, why do I say one last time? This big move down or big move up takes out a lot of liquidity, right? It's going to take out this. Let's say there's liquidity here, right? It takes out all of this liquidity, and then price seems like it's moving back up, and then takes out the liquidity one more time before actually moving up. Now, how do we trade this? The strategy I use is inverse fair value gaps. If you have watched my videos, you'll know that we enter off of an inverse fair value gap on the move up. So I'm going to get straight into some examples here. This is on Monday of this week at market open. You can see it says 9:30. So I'm going to start off by playing it out a little bit, and you can see that we dump, right? Price takes out, like I said, all of this liquidity. We have liquidity here. We have liquidity here. We have liquidity here, right? It takes out all of this sell side liquidity, right? And then you can see after dumping, we have this leg back up, right? Price moved back up a little bit. We have this big down leg, and then a move up, the leg right before the manipulation leg. You can see we get it right here, right? We take out this liquidity one more time. So the strategy that I trade is inverse fair value gaps. So I'm going to go here on the 2 minute because there's a singular fair value gap, right? The 1 minute has multiple fair value gaps. And the way I would trade this is I would enter on this next candle where we inverse right here, right? When I see that it closes above is when I will enter, right? So let's say we enter with 5 contracts here. My stop loss is a close below. If you watch my videos, you know. I would put the take profit here at these equal highs, right? And then right, are those equal highs? I'm not sure. I'm just gonna put it at this liquidity right here, right? This would be full TP, and then if I were to leave runners, you could leave runners up to here at this external liquidity, right? So break even is gonna be at this first internal liquidity, right? So there's gonna be break even. And then full TP is going to be here. So now I would want to take partials. So the way that I would manage this trade is I would take out something here, right? I would probably do, since I'm doing 5 contracts, I would do 1 contract, it was 20%. Take out 20% at this first TP here. And then I would take out another 2 contracts somewhere in here, or another 1 contract. Let's say if I go on the 30-second, let's say we want to take a partial at this liquidity here on the 30-second, right? You can't see it on the 2 minute, but on the 30-second, this is some version of liquidity, I guess. So I would take out some there, and then full TP up here. But I would want to leave a runner, so 20% here, and then runners. So the way that I would manage this trade, like I said, we enter here. Next candle touches here, and then we stop it. We get a stop loss set to break even, a hard stop, compared to before where it was a close below, so it wasn't a hard stop. So the next candle, I would close one because we hit the first partial, and then the next candle we here, so I would close 2 contracts here, and then we play price. You can see we have full TP, and then my runner would be for up here, still stop loss at break even. I don't trail my stop, and then right there, full position closed, right? Runners hit and everything. Now, why do I manage it like this? I personally like to take partials, right? Because this big dump right here, or big move down, is really kind of just one big fair value gap. If I go on the 15 minutes, just one big fair value gap. So it could choose to reject at any time. So while we're kind of working our way through this fair value gap, I would like to have a spot where I take partials. So that's just how I like to manage my trades. You can manage your trades however you want, but this is how manipulation legs are used. And the way that I spotted it before it played out, like I explained, was this big dump. We have this leg back up, and then we take out liquidity again. All right. So I'm going to go on to the next example. All right, so the second example is actually from today. We had CPI, so that's where this data high and data low come from. Now you can see that the data high was already hit, so I can expect it to come to this data low. Now, you could take a trade to this data low, but that's not what I'm going over in this video. So I will play price out, and you can see that we have this big move down to the data lows. Now, let's see if we get a manipulation leg here, right? You could have considered this, right? We took out this liquidity, and now we just took out this liquidity. So we have this move down, then we take out the liquidity. You could say one more time. Now, when I go on this 2 minute, the only problem with this setup, right, is this low right here is equal lows with the other day on the left. So we have equal lows here. So even if this inverses, it is one of the rules. You can actually check out the rules in my Discord. It's free in the description, or in my bio. But equal lows is actually, I don't take longs with equal lows below. And you can see we have equal lows here. So even if this is a valid setup, I would not enter because we have equal lows below. And did we get the entry here? Let me see. Yeah, we did technically get an entry here, but I would not take this because we have equal lows below. You can see we take out the equal lows here. And now we have this fair value gap here on the 2 minute, right? So we have this fair value gap here on the 2 minute. We have this equal low liquidity sweep. So we have this one more leg down as well. After this big move down, we have this leg up, and then one more sweep right here for the manipulation leg. Now, also, another confluence for this is on the 15 minute. We would be rejecting from this 15 minute fair value gap. So we will be delivering from this 15 minute fair value gap. We have this big move down with a manipulation leg, right? So we have a liquidity sweep with a manipulation leg, delivery from this 15 minute, right? So let's say this is the trade. We could trade all the way back up to here if you want to target this, but I personally don't target that much. I mean, that would be 3.4 risk reward, so you could, but I see these equal highs right here, right? We have these equal highs right here. They're not the best form of equal highs, but they're equal highs nonetheless, so it is not a bad target. So my stop loss, they close below, and full TP are these equal highs we have. Of course, if this inverses, if this doesn't inverse, there's no trade. Break even would be right here. I personally wouldn't want to take a partial take profit for 0.4 risk reward. So my first TP, you could say would be here, but that's still a horrible risk to reward. So the next option would be here. So my first partial take profit would be right here, and I would probably, since I would be using 5 contracts for this example, I would take out 40% here. I would take out 2 contracts out of 5, so that's 40% here. And then at these equal highs, I would take another, what would that be, 60% if you want to manage it like that. Or you could take a partial right here if you want to. It's all up to you how you want to manage the trade, but this is personally how I would manage it. Might put a partial here, but if you were to manage it like this, let's see if we get the entry right here. Candle closes above, 5 contracts. So this is the trade that we would be taking. You can see right here, stop loss gets put to break even, right? So stop loss gets put to break even. Is that break even? Or did I say minus $2? It's not letting me put it on exactly break even, I guess. So right here, stop loss break even. Let's see. Right there. Sell off 2 contracts. Stop loss is still break even. So we've secured some profit, and the rest of the trade is now risk free with some secured profit. And then right there, we have full TP. Close off the other 3 contracts. If you want, you could have left runners to here. Let's see if the runners hit. And they do. So that's up to you, depending on how long you're willing to hold a trade. I personally am okay with 2R. And these were equal highs, so it's a really good target. You could target all the way up here if you wanted to, but I would have targeted these equal highs, right? So this is another really good example. Both of these are from this week. And if you guys have any other questions on anything that I've talked about in any of my videos, then feel free to leave a comment on any questions you have. You guys can join the Discord if you want to talk with me directly. It's free in the bio. I'm in there all the time, live trading and everything. Also live trading on Kick now if you guys want to go check those out, those live streams. And also I have a discount code at TPT Funding, or Take Profit Trader. If you guys want to go check it out, they have same day payouts, and you can get payouts twice a day, and you get the money same day. It's nice. You take a trade, withdraw, and then take another trade and withdraw, like get them same day. I really like the idea behind that, but their evaluations are a lot stricter than, let's say, Apex, where you can gamble your evaluations on news. Right now they're doing 50% off if you guys use my code Logan Trades, all caps by the way. But yeah, I'll see you guys later, and see you.